Hello and welcome to another edition of the Crypto Club and Digital Assets Weekly Catch-up on Zoom. It is Sunday, the 18th of May, 2025, and as is always the case, never quite know what we're going to be talking about. These sessions are participant-led, so we end up discussing whatever people who show up want to discuss. If you're a novice to this space, then stick around. Sure, we're going to be covering some interesting things. Or if you're somebody who's more experienced, worked on projects perhaps, come along and maybe join us in future for our Gone in 3 Minutes sessions. And this is where we give you 180 seconds to talk about your project without the aid of slides, demos, or anything like that. Kind of like an extended elevator pitch where you talk about the project or idea for 3 minutes and then we have questions and answers. Each week is different. We sometimes talk about blockchains, whether that's layer 1 or layer 2 solutions, crypto in general, market news, DeFi, NFTs, ICOs, STOs, TGs, any other three-letter acronyms really, the metaverse, central bank digital currencies, crypto regulation, lots of things, and the intersection of AI as well, which is a really interesting connection. Hope you enjoy the session. Do click on the like, the subscribe. Even better, come along to a future event. Anyway, with that, let's see who's going to come and join us today.
You.
Stuart, good morning to you.
How are you?
I'm good, thank you.
You'll
Um,
also see Jack Worrell on there.
I
Uh,
do indeed, yes.
Jack, if you'd put your screen on.
Yeah.
And Jack is my grandson. He's almost 16 years old. He's into business and he understands about crypto. So I thought while I'm with him in Florida, uh, good opportunity to have a fresh mind.
Excellent. Well, welcome aboard, Jack.
Thank you, Gary. Thank you.
Hey, look forward to hearing some of your thoughts later on because we have this as a two-way conversation, so that's really good.
Mhm.
Oh, great,
Yeah.
great to have you join us and joined by Annie as well. Hello, Annie. Welcome back.
Hi, Annie.
Hello.
So, Jack, tell us a bit more about yourself then. You, Stuart was saying already, we know how old you are, so don't
Mhm.
worry. That means that you've got a fresh outlook on things, but you're
Yeah.
already into crypto in some way. Is that right?
Yeah. I'm not necessarily too much into crypto, but been in it a little bit, have put some money into it, and just love learning and yeah, want to hear what you guys have to say about it.
Cool. Okay. Well,
Yeah.
we end up with a real mixed bag because we've got people with different experiences. Um, so some people look at it from the crypto making money side of things. Some look at it in terms of crypto being an alternative financial system to traditional banks and cash and that kind of thing. Other people, like myself, my interest is more around the technology that sits underneath it. So the blockchain
Hmm.
layer and the wallets and the security and everything. Some people look at it from like the business opportunities, and some people just want to make some money. So we
Yeah.
welcome everybody on this. That's good.
Yeah.
And Annie, I guess for your perspective, are you more interested in the technology or the opportunities?
I just want to say that yes, my interest is both the technology and the opportunity. At the moment, to be honest with you, the more I looked at it, my day job also involved in it. I was just thinking, to be honest with you, is decentralized really a possibility? Because if I looked at the blockchain organization themselves with all this, if they have a foundation that everybody built on it, whether, so if you think about Trump meme coins, they have to build on something. So whether it's Solana or something else, right? So those platforms then become centralized in its own right. Why, how can it really be completely decentralized? Um, I think it's a very challenging situation. People like to think it's decentralized, but the more I look at it, and I was just thinking, well, yeah, there's a mix of something, but eventually, let's say if you imagine everybody's on blockchain, some of these blockchains would just be like AWS or or Microsoft Azure or Google Cloud. It's not like you're completely going to be completely decentralized.
It's
Annie, stop
probably
giving the game away.
yeah. I
Those are
was
the
going to say.
secrets.
was going to say it's probably worth coming back to that shortly. Be really interested because it is an interesting topic around the whole decentralization thing. And most people actually don't understand what decentralization actually means, and they get it confused with distribution. But we can talk about it in a minute. But I just wanted to say hi to a couple more people. I see we're joined by, is it Yassine? Am I saying that right?
Yes, you do say it right. That is
Cool,
correct.
excellent. Yeah. Yassine, welcome aboard. I don't think you've been on one of these sessions before, so
It's
hi
actually my
there.
first session. I was invited by Jeremy. It's been a pleasure to be here.
Fantastic.
Thought I'd
Whereabouts are you based then, Yassine? Would this be Cambridge by any chance?
No, I'm based in Zurich, Switzerland.
Okay.
It's not really in my accent, but I,
That's not a problem at all. Okay, well, welcome aboard. It's really good. And we've got another regular here who looks like he's traveling on a train at the moment. Anthony, where in the world are you at the moment?
I'm on a train to the south coast in England, so I may drop off somewhere along the way.
Okay. It's where you discover just how good or bad the Wi-Fi connections are and everything. So,
Unfortunately,
yeah.
the Wi-Fi on the trains or the connections on the trains in the UK are not what they should be.
Cool, excellent. Okay, well, tell you what, we'll go back to Annie's point then, talking about decentralization, because I argue that Bitcoin was a grand experiment in decentralization along with Ethereum, and they both actually proved that decentralization generally doesn't work very well. And I'll offer that to begin with a couple of reasons, and then we'll open it up. The first thing is that decentralization is actually about the decentralization of governance. It's not the decentralization of data. That's actually distribution. So you've got a distributed network with all the data going all over the place. But it's the governance that's decentralized. And Ethereum in 2016 did a rollback where they recovered some of the transactions because something had gone badly wrong. And that was done in a not quite democratic way, shall we say, where it was heavily influenced by some of the founders in the foundation. So that to me proved that it wasn't truly decentralized from a culture and organization point of view. But Annie, you picked up on a really good point about technology platforms. A lot of blockchains now utilize nodes that are on AWS, G Cloud, or not G Cloud, but Google's infrastructure and that kind of thing. So it's not that decentralized. I don't know. Here's why I throw it up. What do other people think?
It's decentralized, Gary, in the sense that location-wise, it's decentralized. It may not be decentralized in the owners of the processing power. For example, AWS in Switzerland is still AWS. AWS in Miami is AWS, AWS in London, and so on. So is that decentralized? I don't know. I mean, in some ways it is, some ways it isn't.
I'd argue that's a good example of distributed.
Distributed computing, yeah, exactly.
I'm going to check another point in here. Hopefully the sounds quality is okay. And Gary knows I have a few strong views on things. Problem with a lot of decentralized is it's the same chains. Sorry, the question is between Ethereum's and centralized chains and decentralized chains. Centralized chains, the problem with them is the legal context. Is if you have chains that have nodes across a variety of geographies, that poses a problem for the legal system to define jurisdiction, and therefore it impedes its progress to becoming an institutional grade a token or instrument that the institutions can use. It's a big problem for the industry. A fully decentralized chain operating in a location, sovereign, jurisprudentially correct within the nation state's laws, is extraordinarily powerful, and that's what competes directly with the banks. We're in a hybrid world where we're moving toward that, I suspect. But right now, a lot of people don't understand that legal argument and the business case argument between a well-distributed system of nodes around the world, which gives security, versus the sovereign and jurisprudential issues, legal issues that apply to them. And there's also tax issues. The problem is if you have your nodes being done in other people's countries, then the tax authorities in those countries like to claim the taxation on the transaction. And so you've got another impediment. You know,
I think
type
Anthony, I
of
think you're going through a tunnel. Yeah, and Anthony, we're kind of losing you at the moment. You might have dropped the camera off, but I think you've just gone offline, which is a shame because that was a really interesting point. I don't know, Yassine, is this something that you have knowledge of or interest in any way? The whole decentralization argument.
Overall,
I'm a big.
Oh, I think Anthony's trying to join in still, but we're not getting you there.
all good. I just thought there was someone trying to speak. So, overall, the whole point of decentralization was to get away from the natural aspect of banks being run by corporation and agent and having central agents overall. I think we are on a path there, but there is no true decentralization since it's Earth. I mean, otherwise we'd have to have servers floating around in a way, which we are close to at the moment, but we're not there yet. But I do believe we have reached a very high level of decentralization in a sense.
Annie, does that in some way answer your interesting question?
I'm not sure, but I would like to hear from Anthony because he seems to be back. Anthony, you were cut out for a bit earlier. I wondered whether you can repeat from where you cut off, please.
Well, it's either that or Gary knows I talk too much and cut me off.
No, I thought it's your signal, Anthony.
It's probably my signal, I'm afraid.
Yeah.
Annie, to answer your question, it is a new architecture coming through, I believe, that for a lot of us, we look at, I've been in the industry for about 2014 or so, and a lot of us looking at the evolution of it, we can see that BTC, Ethereum, they're all, for us, a bit like pornography on the original internet. It's a great way to try things out, spend some money, make some money, and break things. And we're learning quickly. And we think the natural evolution now is to sovereign decentralized system. So it works in your local jurisdiction. That's important because we want the chains and the values that they hold to compete with each other. We want the best to win. We want the Darwinian process a little bit here for a better outcome, both in the technologies, their speeds, their efficiencies, the societal issues. Is it good for the public? Is it only good for a few in the public? And these sort of things. So we see natural evolution, but we think ultimately it'll become a lot more decentralized and a lot more specific to the jurisdictions in which they're operating.
And I think backing up what Anthony was saying earlier as well, one of the challenges with decentralization is jurisdiction. And it's something I see startups struggle with many times, where they always seem to think that the only law that applies is the law of the country that they are in, whereas a lot of the time it's actually the law of where the token is being traded or where it's being marketed or promoted and that makes the world a whole lot more complex place. And in the US, for example, so we've got Stuart and Jack as representatives of this. I think there's about 13 federal regulators who take an interest in crypto, whether that be CFTC, SEC, US Treasury, or whatever. And then on top of that, you get to discover why the United States is called the United States and not United America, because every state has then got 50 different regulators as well, with state level regulation, where how crypto is handled in New York is different to Delaware, is different to Nevada, California, and so on. And this is where jurisdiction plays a very important part, because crypto is one of those things that it's actually quite difficult to stop it crossing borders. If you work in a physical industry, whether it's mining or alcohol production or whatever, you can ultimately have people as border guards or state police or whatever. who can control things. But with crypto, it just slips through the cracks. And that's where it gets really interesting, because that means that you can't regulate it so easily, or rather everyone tries to regulate it. And that's where decentralization, again, as Anthony was alluding to, becomes a bit of a challenge. So
Yes, it is indeed. That is why I'm just thinking, if you're talking about AWS, interestingly, AWS is not being seen as decentralized, despite that, you're talking about there is something called US East, EU Central, EU whatever, where the data center is
mhm.
located, right? So the point I'm trying to make here is, whether it's Polkadot or Solana who is giving out or providing a platform where other people can build on. So you can either build on your computer games on it, or you can build on whatever apps that you wanted to do on it. The point is, isn't it then Polkadot and Solana becomes the centralized AWS and Google Cloud? I mean, what is the difference? There is no difference, right? And is it really decentralized finance actually better than centralized finance? Because at the
So
moment, I can transfer money from one bank to another very easily. But actually, if you try to sign up for a whatever cryptocurrency account, it's
mhm.
not so easy.
Yeah.
It's not
Well,
as easy as opening a bank account.
so this is again where it gets interesting, that it's entirely possible to trade peer to peer. So I've forgotten who mentioned it before, but the original purpose of Bitcoin was to do peer to peer electronic payments without an intermediary. Well, you can do that. I've got a crypto wallet. I can send directly to Annie, a crypto payment. Doesn't involve an intermediary beyond the network. However, how do most people buy and sell crypto? It's generally via what is now likely to be a regulated exchange. So whether that's Binance, Coinbase, Crypto.com, Bybit, or whatever, there's many others out there, which are pretty centralized, aren't they? They're single entities in some way. Um,
Yeah,
so that's where, again, it's not really decentralized if you're going via an
no.
exchange. And then people say, oh, yeah, but at least the level it's decentralized, even through exchanges, means that it's censorship resistant, which was what one of the original purposes. Again, the whole idea that governments or agencies couldn't restrict transfers. Everyone who's in crypto commercially knows that all the exchanges, all the regulated ones, all the big ones, all play ball with the US Treasury's OFAC list. So this is the sanctions list. So if OFAC publish a list of crypto wallet addresses that are sanctioned, then they get blocked, frozen, or whatever. So again, it's not all decentralized and open as people think. So anyway, it's quite an interesting one. Been joined by a couple more people as well. I noticed Elena's joined us. So welcome back, Elena. JT's on. JT, who's now cryptographically secured and now is seen on here as FM. FM being a cryptographic hash of JT, but I'm not saying which algorithm it is. And Dr. M as well has said that he's listening and walking at the same time. So he's just going to listen rather than contributing. So welcome everybody as well. So Annie, does that kind of answer your question a little bit more now that we've got crypto is in a distributed state, but most of the time it's not that decentralized?
Yes, I think so. And yeah, I agree with you. They like to advertise it as decentralized, but actually, if you work it out, it really isn't as decentralized as it claims to be. But
The other thing as well, I'll open this up for everybody, is what I often throw in as the so what question of actually whether it's decentralized or not. So what? Now, for people who are into crypto and into technology, they'll probably lynch me for even asking that question because it's absolutely critical and everything. But for most members of the public, they probably don't even know the difference between centralized and decentralized. All they know is that they've got a bank account, so that's centralized, and that they can make payments. But it feels, because it's on a mobile phone on their app, it feels decentralized, even though it isn't at all. Most people don't care, but they will do at the point at which a authority restricts their access to the banking service, which has happened around the world before now, and was one of the arguments for using decentralized crypto. I'll leave it there for others to comment on. Yeah, Anthony's dying to join in, but is going through a tunnel again, I think.
All right. So here's a point. I mean, there's a classic line of "not your keys, not your crypto." So that supporting that argument is that, in particular, with our government's central bank digital currencies in Europe, particularly, they're very bullish on this stuff, pushing it through. It makes a lot of sense that if you do own crypto, is you secure it in a off-network wallet, so that ultimately it's yours. It's very hard to take it from people. What a lot of governments don't realize, because they're still in the legacy world, is that banning crypto completely is like banning the letter A in the alphabet. It's almost impossible to do, and it morphs, it changes, it goes offshore. For example, in the UK, we're looking at a lot of legislation right now that makes it difficult to launch some of our products in the UK, but we can literally overnight launch it in the Marshall Islands and do exactly the same thing. And there's nothing the UK government can do about it. So it's a really fascinating journey that we're on right now, because we're actually working with the stakeholders, with the Treasury, with the government, and all of this. Sorry, apologies, background noise.
It's all right. We can hear you, but your video signal is not so great. But that's less important. That's good. Yeah. So it's a real mixed bag. I think it's the thing. You're right about regulation. It's like you're seeing being in Zurich, FINRA. Is it FINRA? FINMA? I always get mixed up. The
FINMA.
Swiss, yeah,
Yeah.
the Swiss regulator is pretty good, and that's why a lot of crypto firms incorporate in Switzerland. But if you go beyond that, are you actually in Zurich or are you in Zug? Yeah,
I
see.
am just in between in Talville, so I got 20 minutes to Zug and 20 minutes to Zurich, right in between.
And the reason I ask is I think Zug is a great example of decentralization, because it seems that most crypto activity in Switzerland is in Zug. In fact, usually in one building in Zug, if I
When
remember
it's centralized.
Yeah.
It's very tax poor, so they don't ask for a lot of taxes for companies overall.
Mm. Yeah,
So that's where you have the foundations in Zug.
yeah.
Tax havens.
So
Well,
we should all go and work there.
Cost of living is high.
Yeah, I was going to say, Dubai tends. This isn't. I always say this is not financial advice. This is also not where to live advice. But I get the impression that the tax advantages of somewhere like Dubai is probably even greater than Switzerland these days.
Pretty much.
But yeah, each to their own. So anyway, it's an interesting topic, Annie, and thanks for bringing that one up. And it is something that I hear time and time again about, the decentralization, distribution, and so on.
Well, it just reminds me of something while that conversation happening just now. What it reminds me was, if you look at the unfortunate situation. So one of our WhatsApp group member has experienced this cryptocurrency completely disappearing because of the scam from LinkedIn.
Mhm.
Now, if you think about it, if somebody was accidentally scammed from a financial traditional banking system, in the past, you get all your money back. Nowadays, nowadays you have to pay the £100, but you still get the majority back. You only pay the £100 or whatever it is that the bank now stipulate. But with the cryptocurrency, you lost all of it. You get nothing back.
So again, it depends on the circumstances. And this is the thing. Funnily enough, I was at a crypto event in London Friday evening where we were talking about a few of these things. And one of the questions that was raised was, why are there so many scams in crypto? And it came down to a couple of things. One is people are generally naive in a polite way. It's just that they're uninformed, they're uneducated, and also they're greedy. And scammers are very good at exploiting people's naivety and people's greed. But it's not just crypto where there are a lot of scams. The mainstream finance, there's a massive amount of scams and corruption as well. And this is where I noticed Stuart was shaking his head at the same time as me when you were saying about how you get your money back in there. Actually, that's not true. If you take a look at one of the biggest scams in the UK in the last 5 years, it was the biggest non-crypto scam called OneCoin. Okay, and what OneCoin is fascinating because it was purported to be a new crypto token that didn't actually exist, and they got, I think it was $4 billion out of it in total. It's fascinating. If you get a chance, Google or use your favorite search engine and check out Crypto Queen and OneCoin. And it was, I think they were from Bulgaria, something, the people who set it up. And that was an absolute scam. People lost a lot of money and they're not protected in any way. The banks do not protect you if you decide to buy into a scheme in some way that turns out to be a criminal enterprise in some way.
Okay. So I'm actually comparing like for like rather than necessarily they're not like for like. So basically, I know of at least 2 friends who has been scammed before they managed to get their entire money back because it is a financial situation, HSBC. Now, the point is, it is also a random person, for the cryptocurrency rather than it's an organization of any kind. But my point is that, if you look at the examples like that, I mean, from my personal experience, probably because of my personal friends, they managed to get all their money back from HSBC, but it's not true in the cryptocurrency world.
It's
If you
also
lost
not.
something, it's gone.
It's also not true in the traditional finance world. But they were very fortunate that HSBC chose to refund them in some way. If you have a UK bank account these days, you'll probably notice if you're making a payment for something, it's getting harder and harder to just make a payment without having to answer a whole range of questions. What is the purpose of this transaction? Is it valid? Is there a risk that you're being scammed? They ask 20 odd questions or whatever, or it certainly feels like it. They're not really asking those questions to make sure you're safe. They're asking those questions so that they've got an audit trail to prove that they've carried out their due diligence. Okay. And that then protects them. It's not about protecting you. So at the moment, you're right, Annie, that for relatively small amounts, they may well give a refund and say, yeah, it was obviously a scam or whatever. But if you look at the way that they're building up their list of questions that they ask you, that's so they've got the evidence to say, well, we checked and we asked you, did you think this was a scam? Was it suspicious? Blah, 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 blah. We've fulfilled all of our obligations. It's your own lookout. So I would urge caution with this thing that actually you're protected, because I don't think you are. And I think over time that will change. I don't know. Anyone got different perspectives, different thinking on it? I saw Anthony smiling again.
You know me. Gary, yeah, Annie. Couple of things. One, be very careful of custodial systems, because the insurance on the custodial system doesn't cover all the assets that they hold or claim to hold, because it's an IOU system ultimately. They may or may not truly have the assets that they're showing on the account that they have for you. Hence the original discussion about wallets and having off-chain or off-network wallets. But even then, there's risks. People forget seed phrases. People put a ledger device in their Brink's vault and find out that the battery dies, and that causes all ends of panics. People put them on their mobile phones and then put the mobile phones in the Brink's vault, and so on and so forth. But there are new technologies. As I said, we're in an industry of evolution. And there's new wallets coming out now, for example, that have 24/7 backups. So if you drop it down the drain or it's up to the point where it was lost. So there's some good tech out there.
Sorry, Anthony, do you want to repeat your last sentence, please? Because I think you get cut off a little bit.
I am in one of those proverbial tunnels. Yes. Have a look on the chat channel, because there's a link there that maybe you might find informative. It's not promoting, but there are new wallets that are coming into the marketplace that are 2 to 8 generations ahead of anything that's out there at the moment, that allows for lost recovery. So if you lose your wallet, if you lose your wallet with all your assets on it, you can get it back literally within a few hours, with a full backup of everything that was on it up to the point where you declared it lost. And so therefore these technologies are evolving, and some of the technologies are coming out now.
Annie, I'm going to throw
losing Anthony again. Yes, I know, but that, yeah, moonlighting.
I'm going to quickly throw something else in here to kind of put it into perspective. So, just a quick search on how much money. This is not crypto. This is financial crime. UK people lost, so that means they didn't recover, 11.4 billion to scams in the last 12 months. So,
like a growing industry as well.
Yeah, absolutely.
4 billion. Yeah, that's good.
Yeah.
How do we get involved?
You know the way I said I don't offer financial advice. I also definitely do not offer criminal advice. Yeah. And it is funny, actually, because I do a lot of in the insurance sector, and I used to give presentations where I actually used to open up where I do talks to insurance people around crypto, because obviously it's a potentially interesting area for insurance. I did always used to open it in very big words with, "This is not financial, legal, taxation, or criminal advice. But if you want to money launder, you might want to use US dollars rather than Bitcoin," type thing. So yeah, you're right, Stuart. It is an ever-growing industry, and I have often said that we can look at different industries' technology adoption to look at future trends in there, and the leading industry to adopt new technology is criminals, because it's low cost of entry, highly competitive environment, no regulation, because there's no criminal regulatory board or whatever. If you get caught, obviously you may go to prison or something, and so it's highly lucrative. So it's one of the fastest paced industries, which is why with me doing stuff in cybersecurity and that kind of thing, you're constantly playing a game of trying to keep up to, as opposed to ahead of, the criminals, because they're always coming up with new and interesting stuff. And sometimes it doesn't even have to be that clever, because ultimately we're dealing with human beings, and human beings are generally pretty gullible people, particularly when you dangle something that looks really exciting to them of, oh, you can make 20% per day, just sign here, here's a screenshot of how much I made last week, blah, 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 blah. Humans we're remarkably trusting people, particularly when we think there's a great opportunity. That's why the only financial advice I'll offer is, if it looks too good to be true, it will be. So tread carefully.
If you put in perspective, everything you just said, it comes back to the discussion that, some traditional finance guys like to pull up, and media and so on, will say, hey, money laundering in crypto, blah, blah, blah. Yeah. And we know there is not even 1% of the total money laundering in the world is crypto. Not even one. Yeah. I think it's something like 0.22%, if I'm not mistaken. If you're going to look at scams in the UK alone, yeah, only, it's quite a lot, actually. 200 million pounds were crypto scams, well, people affected by crypto scams. But the scams in UK are 1.4 billion. Yeah. So put that in perspective as well. It's not, I think crypto can give you a lot of safeguards, by the way, compared with all of the other traditional scams that you see around.
I agree. And Annie, again, here we go. Just a quick search again. Crypto represents typically less than 1% of all financial crime. And as JT said, like 2023 illicit cryptocurrency transactions. So this isn't just scams. It's all illegal activities.
Yeah.
No, tiny.
I understand, but it is quite interesting that it's actually a lot harder applying for a cryptocurrency account than it is applying for a bank account. So bank account, you can open it in less than a day. Also, just to say regarding the scams from banks, they are now, if you try, I think people can no longer get full refund anymore. In the past they can, but not anymore. So the banks has already put things in place. So that, as you say, it's probably more like to protect themselves now than actually to protect people. But then, yes, with regard to cryptocurrency itself, you can't open a cryptocurrency account easily.
You can't open an account
That's not
with a
true, man.
regulated company easily in the UK.
Yeah,
You
preface that.
can a bank, for example, there are banks that now you just download the app, yeah, and if you already have a bank account in UK, in another bank, for example, yeah, it will take you just the process of typing your name, we ask a few questions, half an hour, you get an account open to you. You get straight away the bank account number and so on, but you'll get the next day or within 48 hours the activation code for that account, which comes through the post. Yeah. It's still, but allows you to receive money straight away because from the moment that account is created until you have your sort code, you have everything, you have an IBAN, really, So you can even receive international transfers. Someone was telling me the other day, I think it was Barclays or Lloyds, I don't remember. He said it took him about 30 minutes. That's it. But he had already an account, I think, in HSBC. So maybe they have some way to verify, I don't know if there is a register shared by the banks. Maybe Gary, but that was very interesting when he told me that. They asked me, one of the last things that they asked me is if I already have a bank account. Yeah. And which bank? And that's super interesting.
It does keep changing. But what's interesting again is that generally, I think Annie's right, that generally it's relatively easy to open a traditional bank account compared to opening a regulated crypto account. But that said, if you go with any of the UK regulated accounts, is it Zebu and these ones, you can register quite quickly. Sorry, Stuart, you were about to say something.
I was going to say it's in the UK because I opened a crypto account a week ago, another crypto account, and it was open in 40 minutes, 30, 40 minutes, which is a lot easier than opening a bank account in the UK, which I did 2 years ago, adding my wife to my account, and we were there for half the day. And I just find it amazing. And this week, I'm doing some legal action against some people in the UK. The lawyers sent me a retainer request and wants me to do a KYC AMA for £2,500. I mean, that's kind of ridiculous. But the UK seems to be very protective of its citizens. So, if I want to transfer $500,000 out of the UK, they probably want to know what I want to spend it on.
And it's something as well, this is worth bearing in mind for people as well. A lot of the time, particularly around crypto, where banks are reluctant to deal with it or open accounts or anything like that, they will always pitch it in a way that you think it's protecting you. Actually, it's not. It's protecting them. So banks, where they talk about KYC and AML, so know your customer and anti-money laundering, they're doing that because they've got a requirement to be careful about that. Not actually that they're protecting you in the slightest, but they'll always present it in a way that sounds like they're doing you a favor. It's a bit like a few years ago, the UK FCA, so that's the UK regulator, put out a survey about people's appetite around crypto derivatives. So things like exchange traded funds and this kind of thing. And I think it was 98% of respondents said that they were in favor of introducing crypto derivatives. So the UK FCA duly noted that, totally ignored it, and banned them from UK retail business, saying that they were too risky an investment for people and that they wouldn't know what they were doing, and therefore you ban them. Which is kind of interesting, because if you accept that people putting money into something know that it's incredibly risky and that they're probably going to lose their money, then I would say that they are actually quite well informed. Just like putting it, if you go into a casino, all on red or black, there's a good chance you're not going to get your money back. But that's up to you. So I actually know people who are considering exploring ways of actually taking the FCA to court on the basis of how much money they've lost because they weren't able to invest in crypto derivatives that have done really, really well. Because there was a UK crypto derivative that was launched a number of years ago by a highly reputable, recognized company called Hargreaves Lansdown. And they launched a crypto product that, because of the FCA's change, they had to suspend new membership in that. And people said, well, this is stopping me from making money. So it's an interesting one. Sorry, we've gone on that subject for quite a while. So I'm going to open it up and say, is there anything else that we can discuss this evening or this morning?
I just want to warning people about some of the deep fakes going on at the moment.
Mm-hmm.
There's some very advanced hackers that are targeting US government officials, crypto people, and these deep fake technologies they're using is incredible because it actually, basically in real time, it is the voice of the person and it is the face of the person. It's very difficult to recognize that it is a deep fake. So they tend to actually lure people and say, hey, do a Zoom call, that type of thing, so that it looks more authentic, and it actually looks like that person, it doesn't matter if it's a crypto guy or if it's a government official. So be aware of that because it's scary from now onwards, Once they cross that line and they can achieve that quality on real-time video conferencing, that's it, we're done,
I think we've probably all seen enough deep fake AI videos of President Trump doing various things with Elon Musk or whatever else, which is fun. It's entertaining. But if it was something like someone claiming to be a colleague who's trying to connect you via a Zoom call or a Teams call and asking you to change your bank account detail or something to do a payment, there's definitely the risk of more and more of that. And again, from the insurance sector, it's really interesting about how do you detect deep fakes for this kind of thing.
Read this one, okay? And scroll down where you see Sandeep from Polygon explaining the attack vector. What they did, they basically hacked the Telegram of a guy, the Shreyansh guy, And then
Are you sharing your screen, JT?
I am. I'm just about to.
They pinged all the port calls, and potential port calls that interacted with that guy. Scroll down a bit, And then people then read this because it's, well, people have the link anyway, down, a bit more down. More, you'll see his Telegram, more. Continue. Yeah, and from now on, as Sandeep, that's like scary, very scary.
Mm.
Well,
it's a double whammy for crypto people at the moment, because the new thing seems to be to kidnap your relatives and hold them hostage, particularly if you're in France. So I think there's been about 5 cases of that in the last year. So yeah, deepfake people.
This is a new level,
Mm.
This is in real time. They're watching it. You think you are talking with the real guy from government or whatever, from a cryptocurrency, well-known guy, and it's actually an incredible deep fake,
Yeah.
Now I was looking at this, and this goes to a totally different level, because you need to have some very good hardware for this. So we're talking about a very, very expensive graphics card that can process the video stream and substitute the face in real time, which the human eye can't detect, so it's fascinating, but at the same time, the scams like these are going to increase big time, so be aware of that, guys. You can't really trust anyone. I don't know if it's Gary there on the video conference call anymore.
Well, this is it. That's why we are at that point where we no longer actually can be sure, apart from in person. And if you do transactions in person, you then carry the risk that you leave the building afterwards and someone comes along and hits you over the head or something. So, yeah, it's fascinating.
I would say that the scams in crypto world seems to be quite serious compared to things that are in traditional financial institution, or you think they are quite dissimilar?
No,
And by
you're wrong. It's not.
So I've got the exposure that because I work a lot in the commercial insurance sector, and I work with organizations who get involved in insuring things and people, shall we say, against a whole range of nefarious actors around the world, whether that's political violence, terrorism, kidnapping, ransom, any number of things. Crypto is still a tiny part of what goes on. It really is. The reason it feels larger, maybe, Annie, because you're now part of a crypto community. You develop a sensitivity to this kind of thing. So you notice all the stories. So you notice the story about the guy whose father was kidnapped in Paris the other week because he's a Dubai crypto influencer, and the father lost a finger and this kind of thing. So we all become aware of these things, but you may not be aware of all the regular kidnappings that are going on, because they just don't appear in the press. Because one of the things that you don't want to release is about just how many people are kidnapped, because that kind of normalizes it, which then means other criminals go, oh, that's quite an easy way of making money, isn't it? Particularly if people are paying ransoms. So you may find that crypto actually percentage-wise is still a very small amount compared to regular stuff. It's just like it feels like it's a big thing.
Okay, I think that clarifies that point. By the way, I think we do go from different topic to different topic quite quickly, which the last one was quite interesting about crypto derivatives. And I was just curious as to, why people think that is not as dangerous as normal finance derivatives, because if you remember the financial market crash in 2008, wasn't that to do with the proper currency derivatives that people were doing with the house buying and everything, and then suddenly everything crashed?
So this is where the
What do you think?
terms Fannie Mae and Freddie Mac come to mind. So that they were two schemes around financing of houses in the US market.
CFD.
And I'm trying to remember the name of the film now. Was it The Big Short? Which was about all of this. Well worth watching. where you get things for people who don't understand how traditional finance works. If you've got an asset or whatever, a deposit account or a loan
Yeah.
or whatever, you can resell that and it's got a credit rating against it. So, a bank account with a big bank will have like a AAA rating, or whatever. What people don't realize is that what organizations do is they bundle a group of financial assets together, and then they repackage it and resell it. And one of the weird things about credit ratings is if you've got something like what are known as junk bonds. So these are very high risk loans, basically, with a very high probability of not being paid back. Well, if you mix some of those into a AAA bond rated, loan from big insurance company or whatever, then effectively it increases the credit rating of that junk stuff. So it's an amazing thing because it then makes things appear to be safer than they actually are. And then when you do that with properties, of house mortgages and this kind of thing, what it means is that you've then got a load of houses and properties that actually are quite risky in terms of investments, bundled in with some good grade stuff. And this is exactly what happened in 2008, 2009, as you say, where they bundled in these things. And what no one had thought about is when you look at the default probability of an individual loan in some way, you can do a calculation on that. And like maybe it's 5% or something. So there's 1 in 20 probability that loan might default. What no one had considered was the contagion effect of if everyone starts defaulting, that causes the value of the properties to collapse, which then causes everyone else to collapse. And that's kind of what went into that. Yep, so it was all related to that. None of that was crypto.
I know, but I'm just kind of curious as to whether people would repeat the same thing or similar thing.
They already are.
Right. What makes us think that, crypto is necessarily safer, regardless that it is decentralized or whatever else that they claim to be, right?
It's not. It comes back to, I remember having a conversation with some people from, I think it was Charles Schwab, who are a traditional share broker company, whatever. I've had this conversation with a few other trading companies as well, non-crypto. They all admit around about 80% or so of their clients lose money. That's just the nature of them. This is just in simple buying and selling shares and that kind of thing. 80% or so of people lose money, but the 80% always think they're about to be part of the 20% who make money. And it doesn't work that way.
And it's a lot worse than that, Gary.
Yeah.
Because in crypto, what we have, it's a very, very fast trading. It's nothing compared with what you see on stocks exchanges. It doesn't matter London or New York, because with crypto it's just bots, and people have trading strategies defined, and the bots just are connected to all the exchanges, to all the loan websites or web platforms, and crypto, and then they know how many shorts and longs and loans are about to be, not paid, and they just manipulate the market. If they want to pump the market, it's very simple. They place longs, and they buy, and they're killing the shorts. If they want to do the other way around, they do the other way around. So if there is more shorts than longs, they're going to go long, the other way around. So it doesn't really matter. Anyone looking at crypto that is looking at trading, especially leveraging and all of this stuff you guys have been talking about, you're going to lose. You can't beat the bots, okay? You just can't. You just hope you are on the right side of the bots. And if you are, then maybe you get some money back, But over a period of time, you will lose, guaranteed.
Annie, I'm just showing on the screen at the moment. The Big Short. I'm not going to play the audio on it. If you get a chance, that is. I think last week we were talking about recommended books to read, recommended films to watch. the Big Short is definitely one of them because it's based on what actually happened, and it is fascinating. It's brilliant. So, look, folks, we're getting towards the end of the hour now. I just wanted to quickly check really with Jack, because you've come in at the deep end here, and we've thrown an absolute load of things in there. I just wanted to check how much of that resonated. Did you enjoy that? Was it interesting? Was it worth listening to when Stuart said, "Oh, you should come along to this event and listen in"?
100%. Yeah, I learned a lot. It was interesting to hear everyone's opinions, and it was great. Yeah, thank you for having me.
A pleasure, absolutely. Yeah. So, folks, we're coming towards the end of the hour. Really, we're getting a bit close. So, I just wanted to offer a quick wrap up of, Annie, as always. Thank you for the interesting questions that stirred off some debate. Elena sadly was quiet this evening. I think she was just digesting and listening. But that's okay, not a problem.
Maybe
Next time, yeah. Well, when we'll talk about, if you think all of this is a crazy world, wait until it happens in the metaverse. I think we take a new level. But yeah, Stuart, JT, everyone else, thanks for joining in there. Really enjoyable conversation. As always, really good fun. Be safe, have fun, and have a great day, everybody.
Love
Bye
and
for now.
You too. Thank you.
Bye.
Bye now.
Nice seeing you, everyone.